Assalamu alaikum, everyone, and a very warm welcome to today's session. My name is Hina Nasir, and I am the Senior Marketing Manager at ACCA. To support today's session, we have our event partners, Karachi Chamber of Commerce and Industries and Pakistan Stock Exchange. To begin with, I'd like to thank them for participating and joining us for today's session. So the discussion around COVID and its impacts, this basically began over 4 months ago in Pakistan. But Alhamdulillah, we have been blessed and we are on our way to recovery, are keeping our hopes really high that there's no second wave. We do realize that the impacts of ongoing COVID, the impacts will be seen in various businesses and industries. To deliberate upon the same issue, we have industry leaders today who have in-depth knowledge on challenges and opportunities that for businesses post-COVID we will be having. To start off today's session, I'd like to invite the President of Karachi Chamber of Commerce and Industry, Mr. Agha Shahab Ahmed Khan, to share his thoughts. Over to you, sir.
Thank you. Thank you very much. I welcome you all today in this enlightening webinar in collaboration with ACCA and Pakistan Stock Exchange. As you all are well aware by now that COVID-19 has disrupted what we call normal standards of operating and procedures. We must do our very best to shape our reality according to what the time requires of us. Since this is not just a local thing, it is an inevitable global paradigm shift, and we must do our best to overcome this challenge. Today, more than ever, the digital reality and transition is needed. Our youth is not taught digital literacy in schools or universities on the level which is required of in today's changed business environment. My focus in today's note is to highlight the tools that can equip the audience with knowledge and provide skill sets that will prepare them to face the challenges of a more digital world in the new normal. It is absolutely up to you to get skills online and upgrade your career value. The best investment you will ever make is the investment in your own self. To build yourself up, Maslow's top hierarchy of need is self-actualization. In other words, knowing yourself and understanding your skills, capabilities, and potential. The more you learn, the more you can earn while improving your life and the life of those around you. I address this to the young minds that wants to self-learn online as they are the future of our country. I share some of the things that can drastically contribute to your work life and career. Instead of using social media for fun, you must learn from it and use it as your number one learning tool. Even right now, you all are watching this webinar on a social media platform. Facebook, this is disruption and adaptation to change. It is very important to understand the concept of following hashtags like cryptocurrency, Forex, business ideas, a growth mindset, valuetainment, and platforms like Instagram and Facebook to be updated with financial literacy. Every day is a learning opportunity. And in today's era, information is literally on your fingertips. Leverage the use of internet to be updated of industries and their shifts. Those who say job market is saturated must realize that one with more skills is always chosen over one with less skills. More than ever now, businesses both locally and globally are looking for top talent and disruptors to help their businesses survive. On a separate note, it is crucial for young career-oriented talents to have their LinkedIn profiles up to date and check it as regularly as you use other mediums of social media. If you do not have the skills compared to others of your field, do not be stressed out. The solution is simple: learn. Because learning is a continuous process. There are free courses from the top universities, namely that from Harvard University, MIT, Yale, UCLA, and London School of Economics, and many more. Go on education courses and find your free courses. You do not need certificates which are paid, yet you need to upgrade your skills. If you do not understand education, simply learn from YouTube, LinkedIn, SlideShare, or so many other resources. Just type the skills you need to learn from and browse out to find the top quality material from renowned institutions. Self-learning should be your top priority. Once you upgrade your skills or from the information you already have, write and publish articles on LinkedIn. Express your thoughts and share your knowledge in your area of expertise. That is how talent is highlighted. Build your honest CV online while constantly upgrading it as you add more skill sets. Instead of using SoundCloud to listen to music, why not use the medium to listen to podcasts from HBR, IdeaCast, Cambridge Business School, Founder magazines, etc. The quality of information, so much channel is similar to attending a lecture in these institutions. The day you decide you want to learn from the internet is the day when you will open a door of knowledge at free of cost for yourself, and this would be the best thing that will happen to you at this stage. These products are absolutely free and on every topic, of example, reading candlestick patterns in the stock market. These products bring you the value similar to the of an expert sitting with you or you being taught from an industry leader. You have to dig a little and find the topics that will equip you with the growth that you require, and all of these resources are completely free and available online. The exposure will have the exposure you will have set you apart and contribute to building a mindset of a doer. In addition, upgrading your skills to make you more competitive than you already are. In case you did not know, there is an entrepreneur and then there is an intrapreneur. There's a difference between entrepreneur and entrepreneur. The key difference between these two is that entrepreneur is already part of the company and adds value with their growth mindset and skills to that company, rising to different levels without being liable to take risks. This is the time when SMEs will rise with the help of the skills highlighted. This is when local businesses will digitalize and become part of the virtual map. We must be optimistic for a better tomorrow and believe that you are the future that will be contributing to the economy of Pakistan. I conclude while wishing you all the very best. We all are entering a new landscape and must be prepared with skill set and knowledge. Karachi's talent is second to none. Be prepared to be the leaders of tomorrow. The time is not very far when Pakistan will be creating unicorn startups, top executives, and the best talent on the global stage. I must share my thoughts while ending my note that you alone are responsible of what you make of your life, and that by investing your time to these resources, ultimately you and your loved ones will be the beneficiary of what you learned today. Thank you very much for listening. Thanks a lot.
Thank you very much, Mr. Agash. Shahab Ahmed Saab. I think there were several takeaways for all of us who are listening today to this session. Future is digital, and future is right now. There, you picked up very important themes like disruption and adoption, financial literacy, and continuous learning. Continuous learning is not a concept that should be valid for youth. Every person, no matter what part of their career life cycle they are, they should focus and spend hours on this particular agenda. Thank you once again for that. Next in line, I'd like to invite Mr. Sujit Aslam, who is the head of ACCA Pakistan. He'd be sharing his thoughts for today's session. Over to you, Sujit.
Thank you, Hina, and Assalamu alaikum. I think Agha Sahab has put it very rightly that where the opportunity lies, and I'll just share one of an example. I was at the World Economic Forum from a ACCA platform, and we were representing Pakistan, and we were trying to really work out that why people should come and invest in Pakistan and where the real opportunity lies. And we were talking about energy, we were talking about mining, we were talking about textile, and there are a lot of areas which we were talking about, and people have a certain level of interest. But as soon as our conversation started with that, we have got a young talent and a trainable talent, which is digitally savvy, and the most of the people are under age of 30, 60% of our population. So that's where a lot of people got interested, because a lot of people were coming from Europe, and they have got the aged population, they are struggling with the workforce, and the somebody who can really take their economy and the liability, the social liability, which they are looking forward in future because of that aged population. So Pakistan is one of a solution once it's come to the young talent which is available. And Agha Sahab rightly pointed out, so it's not the quantity, it's the quality of the talent, the capabilities which we can deliver, and the digital is a way to really connect with the rest of the world. Luckily, I would definitely try to use the word, although very unfortunate situation of COVID, but luckily that's brought a one challenge and a one opportunity there. Everybody is looking forward for a change around the value chain which they used to work with and the value chain of the future. And the future value chain include a lot of different kind of mindset which were not there before. Previously, शायद हम लोग ज़्यादा काम कर रहे थे कि हमारे पास एक ऐसा supply chain mechanism generate हो globally जहाँ पे people can have a low cost products available to them. But now we are talking about a more resilient and a reliable one कि next COVID situation में ये value chains or supply chains इस तरह disrupt नहीं हो. That's mean we are now from a globalization, we might be looking more on a regional economies. And once we are talking about the regional economies, again, those regions will have a collaboration with other regions. And Pakistan, luckily, sitting with the very close to China and the CPEC and the Belt and Road Initiative happening right now, we have got a one wave to ride if we do the things in the right way. अगर हम इसकी बात करें तो इसका मतलब है कि हमारी बिजनेस कम्युनिटी को आज अंडरस्टैंड करना है कि what kind of value chain we are talking about and what kind of volumes we are talking about. If we are looking Belt and Road Initiative as one of a pathway of development, and historically people have developed themselves in a regional collaboration, and we have got examples there from a lot of other countries. I'm sure you will have more learned conversation with the panelists. So wahan pe we have to get ready. And to get ready, we have to start understanding the market dynamics, how it will evolve. So मैं एक बड़ी छोटी सी example दूंगा और मैं पहले भी देता था हमेशा value chain में you don't have to really go for the finished product or a fully completed product. You can become a part of a bigger value chain and you work on a one product. अगर आप गाड़ियों का काम या automobile की industry में हैं and you work on as a vendor on a one nut somewhere, and then you have to look at the volume, you should be the best one who can provide the entire for the entire value chain. You should be able to provide those nuts and bolts which are your specialty, and then you have to enter in those contracts और उसके साथ साथ आपको उसके volumes को भी देखना है कि आपकी capacity भी हो कि उस volumes पे आप जा सकें. And the stock market is one of the best way to really raise money now, given that आपके पास एक तो interest rate कम हुए हैं और दूसरा people have to really spend that money or invest that money in a different way where they can have a higher yield, and the stock market could be or would be one of a medium you can look around for raising money, and you have to start getting ready now as a businesses. Second part, there's a Karachi Chamber of Commerce is there, which can arrange all those awareness sessions. What kind of opportunity Belt and Road Initiative or CPEC is bringing to you, and then we can have a right kind of question. We can talk about the policy intervention, but the first thing is the engagement. Get aware of it. कि इस पूरी value chain में what kind of opportunity exists. If we go on a very fundamental opportunities post-COVID, we will be looking at, and Pakistan ke liye, that's a very obvious opportunity, is anything which has to do with the agri-based. I think that's where we have to focus, and that's where our economy can really reap the benefit, and we can start developing our path towards the economic independence as well as the development. And we can talk about the inclusive development, where the benefit flow down to the remote villages and the farmer, and then the education and the healthcare that can start flowing there as well. So if we start following up on the model which Korea, China, even Netherlands, they have followed, they have focused on their agri-based, and they focus on their value-added agri-based, and that's something which we are bestowed with that. Allah Taala ने हमें एक बहुत बड़ी नेमत अता की हुई है. हमें उस वैल्यू चेन को उस तरह डेवलप करना है कि उसका बेनिफिट जो है वो अल्टीमेटली उस कम्युनिटी को जा रहा हो. Fonterra in New Zealand is a great example where they created a community-based dairy product, like a community and the societies where the entire benefit flow down to the every individual farmer and their families, and they are educating and providing the healthcare, and they are created the entire model around it. So we have got that agricultural land, we have got those trained farmer as well, and it's just the matter of focus and making sure the money is flowing down to farmer, and there's enough incentive for them to get engaged in the right kind of crop, and then awareness again become one of a key area. And again, BRI and the CPEC is one of a wave we can ride around it. Apart from other area, I would again go back to something which Aga Sahab highlighted. I would go with the data. So we have, as an individual, as an organization, we have to create that awareness around how the data can really help us to build a resilient dashboards which can create a visibility around the opportunity and challenges, and can help us to really extrapolate, उस चीज को expand कर सके फ्यूचर में कि अगर इस तरह का वेदर है तो एग्री बेस्ड में आपकी प्रोडक्ट रेंज क्या होगी, और अगर बाकी दुनिया में कुछ चेंजेस आ रही हैं तो उसके लिहाज से आपके एग्री बेस्ड बिजनेस की भी अगर हम बात करेंगे तो क्या होगा. एंड इवन अगर हम डाटा की दोबारा बात करें तो रिगार्डलेस हम जितना मर्जी चैलेंज्ड हो अपने एजुकेशन और हेल्थ केयर सिस्टम में, but as soon as there is a visibility that every patient and doctor's interaction is properly captured and recorded, that visibility itself generate enough pressure for the community and the government to really create that intervention. सिर्फ बातें करने से, which is not data led decision making, which is not data led discourse or debates, that will end up with something which may not end up with the right kind of actions. So the first thing I would suggest, the agri-based one, which we have to start looking at, and the second, create nth level of visibility using the data which is available, and invest in that to generate that kind of visibility, so that can lead to the right kind of decision and actions which help us to really stay on a development path economically and socially both. And whatever economic model we bring in, we have to make sure it's inclusive, and the benefit is passing on to the lowest level of the most vulnerable people within our society and community. And that's very doable. The current change, everybody is going through that change process. We are in a mindset of a change, and this is the time when we challenge our own thought process and bring something which is different but relevant for Pakistan as well as for our society and economy. So thank you very much. Over to you, Hannah.
Thank you very much, Sajid, for sharing your thoughts. I think both the sessions by Mr. Agha and Mr. Sajid has set up a very good beginning for our session today. We have a very interesting panel discussion coming up today. To start with, our moderator for the panel discussion will be Mr. Khurram Shahid, who is a Senior Vice President and Head Investment Banking, AKD Securities Limited. And our first panelist will be Mr. Ibrahim Kasumbi, who is a Managing Director, Umair Petroleum Private Limited. He is a former SVP, Karachi Chamber of Commerce and Industry. Welcome, sir, for the panel discussion. Ms. Raida Latif, who is a GM Marketing and Business Development, Pakistan Stock Exchange. Welcome, Raida, for our panel discussion. Mr. Muzammil Aslam, he is an economist, and Over to you, Mr. Khurram, for the session.
Assalamu alaikum ji. Assalamu alaikum everyone.
Well,
On behalf of ACCA, KCCI and TSX, I would like to welcome all the panelists who've taken out time to attend this webinar. Unfortunately, Shah Jahan was one of the panelists. He couldn't really make it due to some family emergency. So without further ado, I would like to kind of start off conversation with our esteemed panelists. I would like to start off with Ibrahim Saab. My first question to you would be like, we've all heard about the importance of SME sector being the backbone of any country. And I think more so, it is more important in the context of Pakistan. So do you think our central bank has done enough in terms of supporting the SME sector?
Thank you, Khurram. And this is a very, I would, regarding the support from SBP, you might recall that a month or two back, government had announced, while the COVID was at its peak, government had announced a package of refinance package for the SMEs. It was shocking and unfortunate that over rupees 120 billion, around 113 billion, were disbursed overnight. Maybe in 2 weeks' time, it disappeared altogether. And that was meant for SMEs. Now, what really happened is, being in the forefront of business and trade bodies, we are yet to come across SMEs who really received this assistance, because what I think is that when we inquired and we checked with the SBP, what we were told is that about 1,320 entities received the assistance or refinance out of this 113 billion rupees. Actually, at that time, because of the lockdowns and because of the COVID, the under most distress was the SMEs. SMEs like corner shops, like small industries, like traders, like a lot of small business entities were left high and dry. And these 113 billion rupees were actually disbursed to the existing clients of the banks who had relationships and who had borrowed at the cost of about 15-16 billion. And this package that was at 4% was immediately swapped with that 16%, and there was a clear netback of about 10-11%. So both were happy, the borrowers and the lenders, like the banks. And after that, we really did not get any response from them. This was really a kind of amount that could have helped the very, very small businesses, the corner shops, the workshops, the industries at a very crucial time, because they do not have access to funding the way the large scale or those medium to large scale industries or business houses had. So this is where we really felt that the SBP was right, by default or by design, was not in touch with the ground realities, and did not take into confidence the stakeholders. Normally, when the banks market a product, a financial product, they publicize it extensively. Even Hajj applications, if you look at those, you see a large ads in the newspapers, on the electronic media, and banks are really competing for such kind of financial products. But this one really disappeared, and we really need to look at it. Another issue that we felt was that the government was overly focused on export sectors. And export sectors, it's fine to really support export sectors always for foreign exchange earnings, but at the time that we were passing through, and even now, I think the repercussions and after effects of COVID will remain for a long time to come. It was the larger economy, the larger domestic economy, that contributes about 92% of the GDP. Exports contribute only 8%. And those are the industries, the sectors which really needed help at the time. About rupees 1,200 billion out of our kitty were disbursed in that manner. The brighter side was the SAS program. I must commend, and we must really praise this initiative, which was bold and which was judiciously disbursed and reached those who are below the poverty line, those who really needed it. We need similar boldness and initiative for the SMEs, because SMEs contribute about 35 to 40% to the GDP, but they are out of the economic mainstream mainly because of the lack of funding. That funding is crowded out by the large scale industries or large scale manufacturing or large scale trading houses, and the government itself, which borrows from the banks against the treasury bills. So here we need a lot of support and out of box solutions in order that we meet the upcoming challenges, which are we are yet to see. At the same time, I must say there are opportunities for the SMEs which are emerging, which are coming along with the challenges. This is the most critical time that the SMEs adapt, innovate, and be aware of the upcoming opportunities that are going to crop up. Not just COVID, but the other geostrategic dynamics have changed over last few months. If you see, the China has entered the border with India, and they have shifted in their strategic policies. At the same time, we are seeing new alliances being created, and we see another aspect of this change in the global power structure is that the dollar is losing its shine. We may see in the near future, a shift towards other currencies as a reserve currencies. So we are going to see a lot of changes, and how we adapt to those changes will be very, very critical. As far as SBP is concerned, they should look at it again. We are forcing them to do that, and the SMEs are the best off, because I don't see LSM coming up with the growth in the very near future. They are not performing as well as we expect. The last thing I would say is to your question, that the interest rate that was 13% was really criminal. That has really damaged the Pakistan economy beyond repair. We need to have an interest rate that is below 7%. Right now, after a lot of pressure, the SBP reduced the policy rate to 7%, but we need about 4% just to make up for the default that they have done with the SMEs in the last final refinancing package. Bring them on equal terms, and not just for certain sectors or specific sectors or pick and choose. Rather, it should be for the entire domestic economy, so that we can spur growth. The tax revenues are a byproduct of growth. While considering the funding, also we need to look at the tax regime. The tax regime is so coercive. If you look at the budget, it has a clear stamp of bureaucracy. They have taken more and more powers. They have been given the access to big data, to the data of all citizens, not just business people, but the data of every citizen. Through NADRA, through SECP, through banks, through every. So now is the time that they should move out of withholding tax regime and go and make an effort and collect the taxes directly, and go for the direct taxation, rather than relying entirely on withholding taxes, while at the same time having access to such data. They can identify the unregistered persons through electric connections, through commercial connections, through a lot of data that they now have. So now they should have the responsibility. Lastly, I would say that the data that they have access to now should be protected. There should be adequate measures to protect that data as well, which is very, very critical. Today, big data is like oil, and it sells. So we need to have some protection over there.
Thank you very much, Imran Sir, for your insightful and very, very holistic answer in terms of highlighting the challenges being faced by the SME sector. So my next question would be to Raida. Raida, we all know that debt has always played a very, very critical role in terms of capital formation. So how effective the bond market has been in the context of PSX in terms of the capital raise? And I would like to also kind of ask another question in this, would you like to share some information on the recent introduction of the growth enterprise market, which is also known as the GEM board on PSX?
Assalamu alaikum, everyone. Thank you for inviting me for this panel discussion, first of all. As Khurram, your question I will respond to your question in two because there are two different sections, I would say. As far as the debt market is concerned, it is generally the most these days it's the preferred mode of raising capital in Pakistan. Although when you look at corporates, when they think of raising capital, they generally make a combination of equity plus debt. Different combinations होते हैं. So, and they choose which one, how much percentage they should raise through equity and how much they can raise through debt. Then there are other options also to issue to make right issues also. However, debt is more preferred these days, as from an investor perspective, it has a higher demand because of the greater return that is associated. There's a fixed return that is associated. There's a coupon. There's a timeline to it. Hence, investors also prefer to participate and opt for debt instruments. If you look at Pakistan, the debt market was formally established in the 1990s. However, it has been developing gradually, but there's a major thrust to the government bonds, which includes the PI. And that way, the debt market gains more prominence because of the risk-free profile that it has when you compare it to equities. From an investor perspective, again, when you look at equities, it's a shareholder value that they have to determine whether they are getting the expected capital gain, the dividend income, and what kind of combination that would make for them. Whereas when you look at the debt market, the bond market, that has a more a fixed timeline. They know when they're expecting the coupons and at what rate. Again, in the last couple of years, you see there was the high interest rate environment. Again, the high interest rate environment helps the bond market flourish. As the interest rates, as the interest rates have lowered in the last year or so and touched 7%, the investor attractiveness has reduced to some extent. You see more input towards the equity investment. However, for companies, the debt instrument has gained more attraction there because it's easier. It takes a lesser time to go to market, basically. And vis-a-vis equity issuance, it has a lesser regulations, less compliances. So, a lot of times listed companies also after coming in the 2 months exchange, they prefer to go and opt for issuing debt instead of right issuance. So yes, there is that preference, and yes, it's an active market vis-a-vis, and especially in the high interest rate environment, there's a little shift from the equity towards the debt market. Now coming to the GEM board. The GEM board is the Growth Enterprise Market Board, which ACCA has recently given us approval for. In fact, the beginning of this year, we had the approvals, but due to the COVID and all, it could not be launched as effectively as we had ideally wanted to. However, we still have it being promoted and introduced to various potential growth enterprises. The main key aspect of, or what you call the specifications that I would say are of the GEM board are that it is targeted and designed specially to help and assist the medium-sized companies, the growth enterprises to raise capital. And post-COVID is the time when they really are now looking to revive and come back and look at opportunities to raise that capital, that much needed capital to resume and their operations and come back on track where they were. And again, obviously to diversify the business activities as well. The most attractive part is that the post-issue paid-up capital requirement is much reduced as against the main board, where you have a 200 million post-issue paid-up capital requirement. For the GEM board, it's 25 million post-issue paid-up capital. On the other hand, there are certain relaxations also, where your company financials requirements has reduced to 2 years. The audited accounts are required for only 2 years instead of 5 years on a main board. So there are certain relaxations, and it's easier. For the main board, you need to have a prospectus and you need to have a consultant to the issue. Here, SCCP has, upon recommendation of PSX, has granted that waiver of prospectus. So any company can work with their preferred brokerage firm as an advisor and create an information memorandum based upon which they can apply for listing on the GEM board as well. Other than that, there are tax benefits also. So the year 1 and year 2, you have the benefit of 20% savings on tax. Year 3 and 4, 10% each. So in a way, you're actually raising long-term capital at a very, very low cost, vis-a-vis debt, where you have to service the debt. Here, once you raise capital, you kind of you have equity. You do not have to service debt on a periodic. You look at what your business operations and what profits you've made at the end of the year, and you share it in the form of dividend. So yes, that is. These are a few benefits of that are there. The compliance relaxations are there. SECP will prescribe a code of corporate governance also for the GEM board companies. So these are specific features, I would say, of the GEM board. And
thank you very much.
One more thing I must add, that the annual fees and the listing fee is also very minimalistic here. It's capped. The listing fee is capped at 50,000, which is a one-time fee, and the annual fee has a range depending on the post-issue paid-up capital of the companies.
Thank you very much, Raida, for such a comprehensive response. And I would say you've really enlightened us in terms of some of the groundwork that has gone in terms of relaxing the requirements, especially in the context of GEM board. So thank you. So my next question would be to Muzammil Saab. So economy, economy is perhaps the most debated topic these days. I think more so because we are at the crossroad of a host of challenges. So what do you think, from your perspective, what are the biggest challenges confronting Pakistan, especially in the COVID context, post-COVID context?
Bismillah ar-Rahman ar-Rahim. Thank you, ACCA, for giving me this opportunity. Pakistan actually is full of challenges. When we entered into the COVID phase, the biggest encounter we are having was our government is not equipped to face the lockdown, and that was the biggest hurdle compared to other economies we have, which is why our government took the gamble, and we have eased down the lockdown compared to other economies, and Allah has been very kind to Pakistan, and we have seen a steeper decline in the COVID cases. In fact, we have outperformed majority of the world in terms of COVID. So that is the beginning. Actually, I would like to highlight we have a very little buffer in terms of government concern, which is why we are in the IMF program, and we need a lot of money to not only to support our budget. Also, if you go back 2 years ago, we need a lot of dollars to support our external account deficit as well. Alhamdulillah, in the last 2 years, we have overcome the external imbalances. Pakistan current account deficit, as everyone knows, was gone up to $19 billion level. Now it came down to $3.5 billion, which is a long-term trend, and we can sustain that level. The challenge, as I said, our government was very, in terms of wealth, is very poor. So they had to borrow a lot of money to bring economy out from recession. And which is why we have seen the government have given 1,200 billion rupees worth of the package during the COVID. That includes 150 billion rupees for the SARS program. Then, they have done some procurement in terms of wheat, 300 billion rupees. They give concession to the retailers as well as the small industrial producer through 3-month electricity bill. Apart from that, central bank has been very kind. They have reduced the policy rate by 625 basis points since March, plus payroll financing of 120 billion. They have give the extension of 1 year for the principal and the debt payment also. So lot has been done despite we have so many constraints. Uh, we just got the data last week. Our fiscal deficit has touched 8.2% of GDP. This is very high, and almost 4 trillion rupees government had to borrow to finance this deficit. That is the biggest post-COVID constraint in my view, and that is the foremost concern for me. Uh, uh, in this fiscal deficit, it has everything. It has it has circular debt. It has losses of PSEs, all the public sector enterprises like WAPDA, PIA, Railway, etc., etc. It has the issues related to pension. It has related issues to over expenditure or over staffing, etc. So at the moment, our government is very focused, and they want to. They are focusing on two things. A, they want to increase the revenue just to ensure to bring the deficit down, and the other thing is they want to contain the expenditure as well. Let me start with the expenditure. Actually, in expenditure, the biggest pie goes to interest payments. Um, um, this year, for example, the tax target is going to be 4.9 trillion rupees. Out of that, 3 trillion straight away will go to interest payments. As a as a very small revenue, or just like our tax to GDP is 11%, less than 11%, we cannot afford to have such a huge debt payments. That needs to be addressed. Partially, this has been addressed by lowering the interest rate, but you cannot lower the interest rate unless and until you increase your tax base or revenue or growth parameters, etc. So that is the biggest problem. The other thing is, since we entered into the 18th Amendment, government had to transfer 57.5% of their revenues to the provincial governments. So, that amount is 3.3 trillion rupees. So if I add tax revenue, interest payments and uh, NFC award money, which is 3.3 trillion, straight away government, the tax revenue has evaporated, and government needs to borrow for defense expenditure, for development expenditure, and to run the government as well, which is why we have a 4 trillion rupees deficit. So we need to work on, to bring the cost down. Number one, at the same time, government, because of the COVID, government needs to spend a lot on the development projects as well. Government cannot afford to spend less on development expenditure. Otherwise, we will have issues with the unemployment and so many things. So that is the foremost challenge. And the other thing is on the tax side. Despite so many relaxation, we have not been able to increase our tax base and the revenue base as well. Government, I think they have been very kind. This budget is very unusual if you compare from the last 10 years. They have not raised the tax rates. Otherwise, we usually saw, they raise the tax rates. They keep on burdening the industrial sector. We have friends from Karachi Chamber as well. They must be very pleased by looking at this budget compared to the past budget. A, not only government has not passed on the uh, higher tax rates, plus also government has been very lavishly supporting the export sector. Government is providing all support to export sector in terms of electricity, in terms of cheap cost of finance, uh, uh, so many rebates option. So government, they are trying to make things proper. And if you look at the policy side of the government, what they are trying to do is they are trying to become export-oriented economy. Plus,
Yeah.
they are actually looking for the import substitution also as well. So if the government will manage this thing, we need to have very clear objective in front of us. A, we have to be export-oriented economy. B, we have to increase our productivity growth also. Our productivity growth has been low, which is why we need to import a lot. When I say productivity growth, I refer it to the agriculture sector. Our agriculture sector growth has been stagnant since 2012-13, be it any major crop. Our exports have been stagnant in the last 7-8 years. So, which is why, because our population is growing and everything, which is why our import growth has risen in the past few years. So, the government is doing, everything to improve our productivity growth, and that will be the key, which will produce more exports, balance into the trade sector side, trade side, as well as on the fiscal side as well.
Thank you very much, Muzammil, for such a insightful and a comprehensive response on the challenges being faced and how the government is kind of countering these challenges. So my next question would be to Ibrahim Saab. So it would be, I think, naive for all of us to not to talk about CPEC. The new name would be like BRI. So in that context, what are under the development which is going on under BRI? So what role do you think Ibrahim Saab, SME can play?
Sorry, Mr. Ibrahim, you are still on mute and we can't hear you. Could you please unmute yourself and start over with the response?
Yes. Okay. Is it now? Is it clear?
We can hear you properly now. Thank you. Ji.
Yeah. Can you hear? Okay. Yeah. What I was saying is that CPEC is termed as a game changer. It is a flagship initiative of the BRI, and before that, in ancient times, it was Silk Road. So not entirely new. Now, how you play this game, then it will be a game changer. Are we prepared for it really? And have we equipped and prepared and educated our SMEs, and for that matter, all our industries and trade for this? Because we have, as business people, as the Chamber of Commerce, we have yet to see our role in very clear terms. If you're talking about the CPEC itself, yes, it will have tremendous opportunities all along the way, going from Gwadar to China. We need a lot of supporting industries, services sectors, and a road that brings thousands of containers one way or the other. And along the way, we need tire shops, we need mechanics, we need hotels, restaurants, and a lot of logistical services. But unfortunately, what I see, we are lacking we are not really prepared for it. Our infrastructure is not ready for it. Karachi has about 50%, 52% of Pakistan's industry. Likewise, Karachi, the exports country from about 54% of Pakistan's exports are generated from Karachi itself. But if you look at Karachi, the way it is, we are really fighting for life, fighting for survival. And we are not yet ready for the opportunities. If you are talking about the rest, what the rest of the world thinks about CPEC, yes, you are giving sleepless nights to our Middle Eastern brothers. Like they have been operating transit trade hub, logistics hub, shipping hub, and tax havens. Dubai, Fujairah, Oman, and other ports which are thriving on these free trade and transit trade hub. What we can do is we're much cheaper in terms of the services we provide. The land is cheaper. We have 4 seasons. We have a better climate than Dubai or like Jebel Ali, where in summer the temperatures go up to 45, 50 degrees Celsius and labor cannot work. So yes, we do have immense opportunities, provided we have a roadmap for the SMEs that we have here, the service providers. We have very, very enterprising people, very, very dynamic business persons. But we need to be very clear about the role that we have. We have provided Chinese companies or China with the free trade zone. but we have not yet to provide a free trade zone for Pakistani companies. This is the key actually. And our ports at Karachi are so expensive, the most expensive in the region. We do not have a legislation about the port charges, about the tariffs that the shipping companies, shipping lines, their agents, and terminal operators, private terminal operators charge. So this has become a very, very expensive port, unfortunately. And the cost is passed on to the business sector, to the cost of doing business, cost of our production, and cost of our exports consequently. These are not regulated properly, and there are mafias who have collaborated to exploit the importers, exporters, and industries. They impose charges at their whims. We have been working with this government and previous governments. We have been pleading with the Ministry of Maritime Affairs that look, these terminal operators during the COVID situation, they did not give any relief to the importers and exporters. The shipping lines refused to extend any kind of concession. The same shipping lines have extended concessions in India. We have evidences to that. We provided the evidences to Mr. Ali Zaidi. Look, these same companies are giving 10-15 days free time extra so that people can move their cargoes. You know that what happened in lockdowns. The transport was not moving. Everything was locked down. The warehouses were closed. And we were, from running pillar to post. Not a single person received any concession or anything. In India, what they did was they suspended the license of those shipping agents and shipping lines who were not giving the relief to the consumers, to the customers and consignees. So we have to put our house in order. We are not prepared really in terms of our own infrastructure, our own tariff structures, our own port operations, how they are regulated. A regulatory framework is missing for many, many years. Any political party which comes into power in coalition, the first ministry they ask for is port and shipping or maritime affairs, because it's the most lucrative. And this is where we need to look at it again. We need to define the role of Pakistani companies who will have a free trade zone, or they do have a special economic zones, but these don't work the same way as the FTZs work. So we need to have a clarity and clear policy on that. It has to be well defined, because we are also not aware of the details or specifics of the agreement that the government has entered into for CPEC with China. I'm sure this government at least was renegotiating the terms which were heavily in favor of China, of our partner. But having said that, the bottom line is CPEC can be a game changer. It can have immense opportunities for our SME sector, but we need to provide 2-3 things: regulatory framework for the ports, the funding. We have to make sure that the entrepreneurs, the small and medium enterprises and industries do get that funding without a lot of collateral requirements. And thirdly, the tax regime. The tax regime is so coercive, and it has given so much discretionary powers to the FBR. This is very antiquated system. This is like a colonial era system where you just extort from the compliant taxpayers. They have failed to broaden the tax base beyond 1%. Why is that? Because it is too complex. There's a lot of fear factor, especially where the enforcement is heavy, like in the Karachi region, and it is a kind of a discriminatory as well. So there's a lot that should be done before we can say that okay, this will be a game changer.
Thank you very much, Ibrahim Saab. So what I'm hearing from you, I think a lot needs to change for us to kind of seamlessly connect and in the context of CPEC and serve as an epicenter for the world at large. So
correct. See, what I will just repeat one thing, that the regional trade hubs or transit trade hubs, we need to make it a transit trade hub. Unless we are able to do that, and this we are giving access up to Central Asia. We are opening up a whole lot of markets for China and for other countries if they want to join us. So this is where competition is heating up. The geopolitics is heating up. What we see in terms of a lot of bad news that is coming, good or bad, from our friends or from the regional powers that be, the reason is CPEC. And if we are prepared to do that, we can capitalize, make it a transit trade hub, make it as a logistics hub. We have the best conditions, we have the ideal conditions, and we are most economical in the region. We can be. So I think there's a lot that should be done about it.
Thank you very much, Ibrahim Saab. Thank you very much. My next question would be to Raida. So Raida, of late, we've seen a significant surge in the equity market, and I think that there are various factors which have contributed to that. So from your perspective, what are the key contributors in terms of bringing down that interest back into the equity market?
Thank you, Khurram. I think if you broadly categorize the factors, there can be two major broad categories. One, I would say, is the macroeconomic improvement, and the other, that the extent of the damage that was being anticipated at the outset of COVID pandemic has not actually transpired. So these, I would say, have contributed to the recent rally at PSX, where you see the KSE 100 index up from the low in March of 27,000 to almost touching 40 and somewhere and stopping as of today a little below 40,000 points. So these, I would say, are at the outset the major factors. If you go a little more deeply into it, you look at the way the COVID infections have slowed down since July. On the macro front, again, the State Bank, the most important, I would say, or the major role that has played in getting the interest back into the equity market has been the reduction in the interest rates. You see, after 2 years of consistent monetary tightening aimed at reviving the growth, when the State Bank took this decision and started rolling back the interest rates, and as Ibrahim Saab also mentioned, that at 7% it's still high. However, from 13% plus to 7%, we have gradually come down. And because of that, we see this has bolstered inflation, receding inflation. This has bolstered the interest in the stock market. Again, you see there's this adjustment in the fixed rate instruments also, which, because of the drop in the interest rates, there's the deposit, the bank deposits, and other instruments which are more like the government bonds. The interest has moved from there because obviously the rate of return is lower from an investor perspective. From PSX standpoint, this has the benefit of lifting the return profile of the equities also. You see, if you re-rate the market from a PE of 8.8 times versus the recent low of 5 times, so that has also helped. In addition, I would say the government, when in the recent budget, when the government refrained from adding additional taxes, that again has added to the the corporates having better bottom lines, better results, and a positive sentiment has prevailed because of that as well. Other factors which I would refer to broadly is that the introduction of the incentive packages for the few sectors in the budget, the construction, the agri, and the export sectors. Another angle to it would be that the market was propelled by the rise in liquidity, where the average traded value has improved immensely. These are the corporate profitability is also a major driver for the market. Now, if you take the other factors, which are the State Bank, the SECP, the measures that they took in terms of, aside from the rate reduction, I would say, the deferment of the loans, the deferment on the and just the interest payments, increasing the limits on certain loan types, all these factors and steps by State Bank. Then SECP, and I would say they've reduced compliances. You see there's some interest and activity now in the equity and the debt listings also recently. So all this has made a sort of domino effect where we see a positive sentiment and the interest in the market is come back, and we see quite a lot of activity here. Another thing I would say, the rating where the Moody's upgrades Pakistan's outlook, we were under review for downgrade to stable. So maintaining the B3 status has also helped us, help us kind of retain a positive sentiment in the market. So all in all, this coronavirus support package that was given in March, and the health spend and the SRs programs and assistance through the SRs program to the lower income households, these are all factors which are leading to the macroeconomic improvements, which in turn, I would say, have led to the positive sentiment and interest in the market.
Thank you, Raida. I think the government has, to an extent, has been able to kind of successfully generate that intended stimulus, and we are seeing that convergence in a lot of economic activity that is taking place, and inshallah, that is good. The momentum is going to continue going forward. So my next question is for Muzammil sir. So we've seen that the government is taking on head on some of the challenges, especially relating to some of the legacy issues being faced by Pakistan. So, and we all believe that they hold a lot of value. Pakistan has to unbundle itself from all these legacy issues. So, what do you think the government focus should be going forward in the coming months? Should I leave and go again?
Sorry, Muzammil, we can't hear you. Your mic is still on mute.
Sorry.
It's all right. Thank you.
Okay. I think let me start with the legacy issues. Among the chief legacy issue is FATF, and luckily we have Mr. Hamad as well, at the end of the session, and he's the guest of honor. Actually, he was the captain of Pakistan FATF team, and he actually Pakistan has done marvelously well in the past 12 months and achieved so many things, which I believe this government have shown the political will which we have never seen in the past. Be it terrorism financing related issues, be it money laundering related issues, be it tax related issues. Central bank, government of Pakistan, and especially Hamad Azhar, they have done a very great job, and this will take Pakistan, quite far as well. Already, the fruit of this we are witnessing in the form of worker remittances. Everybody was shell-shocked just a week ago when we got the number for July remittances. It was $2.75 billion. We have never seen such a big remittance number in the history of Pakistan. In fact, if you go back in June, we have seen $2.5 billion remittances. When the COVID started, we did the webinar with other leading firms as well. With me, there was very senior people from the banking channels as well as from the stock market as well. Everyone was of the view that our remittances will come down to under $1 billion. In fact, it has shown the other way performance. That is marvelous thing, and that was the legacy issue. Before, what we used to see is we used to get remittances from official channel as well as from unofficial hundi hawala as well. So because of this effort, now majority of the money is coming through official channel. That is one thing. Apart from that, if you look at the banking channel deposits, the banking channel deposits growth has been significant in the past few months as well. Plus, in the first question I have mentioned, government has not increased the tax rates as well. For the month of July, the target for the tax was 243 billion rupees, but government ended up collecting 300 billion rupees plus. Again, that is the sign, the government had a legacy issue of collecting taxes as well. By giving more liberty and the confidence through reducing the tax levels, now businessmen are more confident and they're paying more taxes as well. So then again, moving forward, if you look, our issues related to private credit offtake, central bank has been very cooperative. What we have seen in the past 3 months, it has not, central bank not only has reduced the policy rate, it has bring the reforms to ease. Now they are making rules for housing financing. So before that, we have never seen, banks were keen to lend to for the housing as well. Now central bank is pushing for that. Apart from that, when we saw a COVID, central bank was ahead of the curve. It has immediately started the online system as well, and it ensures the business continuation as well. I was hearing someone before, in the session as well, and he very rightly pointed out, if there will be any second wave or something like that, so the kind of shutdown or close down we have witnessed when we did the uh, lockdown, it will not be like this, because we have learned a lot, and thanks to central bank. So we have actually managed to digitalize the economy as well. uh, uh, During the COVID, what we have witnessed is, although there was a lockdown, retail spaces were closed, but due to the online thing, we have seen there is a good trend. People are buying through online. This is not only increasing your quantum of economy, it is also helping to document your economy as well. You cannot escape online purchases. You cannot escape documentation while doing online purchases as well, be it from the consumer side as well as from the seller side as well. So our legacy, this government, initially I said, the biggest issue for our country is at the moment is energy sector as well, which is why we have a huge, not only the circular debt, but our industry, friend from again Chamber of Commerce have mentioned that because of the higher electricity prices, we are not competitive as well. Recently, we have witnessed government has entered into a massive agreement with IPPs as well. Not only they have revised in the 1994 policy, they have done it on 2002 policies, as well as now on the 2015 policy as well. So this is again the biggest reform, and that is a need of the day as well. When they did the agreement with IPPs, MOU actually, when they signed, our Prime Minister have announced that the next thing they are going to do is transmission side, because our transmission side we have seen a lot of theft of electricity as well as on the gas side as well. Recently, I was hearing Nadeem Bawar. He is the SAPM of special advisor of energy side. He mentioned that they are completely changing the oil sector as well. Now, they will be deregulating the refinery sector, uh, oil marketing sector. They will be changing the mode of how to determine the oil prices at the month end. So there is a big change. And the other thing which really impressed me, he said in the past 7 8 years we have not been able to auction the oil blocks to the oil and gas exploration company. Just on 1st September, they will going to go 20 blocks for the auction as well. And next year again 20 blocks. Imagine if this 20 blocks will be explored and we get any massive discovery, how much it will help, not only to our dollar reserves or to reduce import bill, also to bring down the energy prices as well. So the legacy issue was higher electricity and energy prices. If we will be able to contain that, we can see a better industrialization. Pakistan could be the next factory of the world, but we need to have this basic infrastructure in place. And I think this government is doing great job on that front. And we can see all these positives or impact of all these structural changes doing by this government in the month or year to follow as well.
Perfect. Thank you, Muzammil, for such a detailed response. So my follow-up question on this would be that there's another school of thought which is questioning the sustainability of this particular remittances, and we all know that a slight devaluation can cause a domino effect. So your take on that?
Oh, okay, that is again, as I mentioned just before, uh, where if we talk about April, majority of the pundits, experts, industry people, they were of the view that our remittances will fall sharply, and it has surprised everyone. I remember that in June when we saw $2.5 billion, a lot of friends and colleagues and senior people, they said, a lot of Pakistanis are laying off from Saudi Arabia and UAE, which is why our remittances has increased. I told them the same thing, this remittance will sustain. And in fact, it surprises me when in July it came slightly higher from $2.5 billion. It came up to $2.75 billion. In my view, I gave interview to Arab News as well, to Khaleej Time as well. In my view, it has nothing to do
There is
with
not of
layoffs.
Gauri only.
Actually, it has more to do
He is in
with
the country. Tell us of
uh, actually, actually, it has more to do with the aggressive central bank, online digital facility. Plus, in the past, we used to get lot of cash coupons, cash deliveries through air route as well as from the border. When I mentioned to the FATF thing, the FATF has uh, made a huge difference. Now it is not easy to bring cash through dollars from borders as well as from through airports as well. There has been a strict check on it. The other thing is central bank has reduced the now central bank is providing a better exchange rate. For example, if currently if it is 168 per dollar, central bank is making sure they provide close to this exchange rate to the people. Thirdly, they have incentivized the exchange companies as well. They give more incentive to them to send money through official channel, and they are rewarding more compared to the past as well. So actually, the mix has changed. Before, if we get X dollar through Hawala Hundi, now we get X minus one, and this minus one is actually added on the central bank official remittances as well. So that is the main reason, and the one more factor which is very, very crucial. From Ramadan till Hajj season, there is a huge religious, travel from Pakistan to Saudi Arabia. So usually what happened in the past is because this year Saudi Arabia has not allowed Hajj, and for the past few months there was no Umrah at all. We usually what we supposed to get remittances from Saudi Arabia, it stayed there because these Hajj operators and Umrah operators, they buy dollars or actually Riyal over there through Hundi Hawala. So this time there is no travel. So what we have witnessed is we got more money traveling back from Saudi Arabia, which is why if you look at the breakup, there is more money coming from Saudi Arabia. Last but not least, usually during this season, lot of Pakistanis, overseas Pakistani, they come to visit their family as well, and during the summers as well. Because of the COVID, there was no flight operation, so they don't manage to came to Pakistan. But they have sent money to their loved ones, to their family as well, which is why we have seen such a high number. So I rule out this $2.7 billion has a huge quantum of layoff. It might be there is a fraction, but the majority of that money, I gave this reason to you, is coming from that channel. And I'm positive, if not $2.7 billion, we will sustain 2.2, $2.3 billion monthly average for the next 12 months.
Everyone for sure will be tracking this number. Thank you very much, Muzammil sir. Thank you very much. So I think one of the silver lining that is coming through is the audacity of the government to kind of challenge and take on all these challenges, and we all hope that government is able to kind of conquer each and every vertical step by step. So my last question to the panelists would be, in one word, how do you describe the future of Pakistan in the next 12 months, starting from Ibrahim Saab?
Ibrahim Saab, your mic is mute.
Ibrahim Saab, your mic is mute. Yes.
Okay. I think the impact of COVID has not been as severe as we had anticipated initially, and mercifully and with the blessings of Allah, we are better off than our neighbors. So I think down the road in 12 months, as also Muzammil pointed to some very positives, many positives rather, we should be able to move forward, and the effects of the measures that have been taken by this government and the policies that are in place. I hope we continue with those. There is some fine tuning needed, and if we rectify a few things, like as I said, in the case of SMEs, in the case of tax regime, the conditions of CPEC on which the private sector will be able to work, we should be doing better coming out of this COVID and coming out of and taking advantage of the geopolitical changes in the region. So I'm optimistic. I'm a born optimistic, and I look forward to better times, inshallah. With some, of course, with some changes in the tax regime, and especially we also hope for some reforms in FBR and its administrative structure that will give the possibilities to broaden the tax base, which is very, very important. Unless we broaden the tax base from 1% to as high as 2% at least, we will not be able to overcome the fiscal deficit that is chronic and that will continue. No matter what we do, everything will be offset if we fail to broaden the tax base, which should be the next priority.
Thank you, Ibrahim Saab. Raida, my same question to you. I think your mic is muted.
It's fine now. The question, when you look at the revival, I would say post-COVID, we see that the businesses are gradually gaining grounds again since the lockdown. The last few month or so, the lockdown was selective lockdowns, and businesses had an opportunity to come back and start their operations, figure out where they needed to review, revisit, and organize for recovery. So I feel that in the next 6 months we should be back and up and running, hopefully, inshallah, post COVID, because there are the reforms at the government level, at the state bank level. We see businesses supported by the governments. So in view of all that, and that overall, I would say positive sentiment prevails in the market. Because of all that, I feel that yes, we'll be back on the road soon, inshallah.
Thank you very much, Raida. So I would like to ask Muzammil. So how would you describe Pakistan in the next 12 months?
As you mentioned in one line, I would say we will surprise all the estimates given by IMF, World Bank, ADB, in fact, the government of Pakistan. Everyone was expecting 2%, between 1 to 2% growth in 2021. My call is we can touch 5%.
Great. Muzammil Sahab, I think we've got time. If you want to elaborate, you can. You have the liberty to kind of elaborate on this.
Okay, that is again. I'm sure that will be the surprising thing for my all panelists as well. But let me tell you why I believe this 5% can be achieved. In the last quarter of last fiscal year, actually, the entire economy was shut, and our GDP went down by, I would say, 3.5%, because entire 3 months, economy has closed down. Number one, we started to, operate. Actually, now we are on the pre-COVID level almost on the pre-COVID level. If you see the exports number for the month of July, our exports has gone up to $2 billion. Apart from that, if you look at the car sales, it was 35% up. If you look at the cement sales, it was 35% plus. Uh, if you look at the fertilizer sale, it was 28% plus. When I said 28% growth in the fertilizer sales, so there will be a lot of labor to be employed as well if you are selling more fertilizer from last year level. If there is a 35% increase in the cement side, cement sales, cement is again a very manual kind of industry. So it means there is more labor engaged for these kind of activities. And plus, if cement sales are going up, it means another 25, 30 or 40 industries, they must be selling, their product as well, because in the construction industry, they all complement each other. So there was a low base effect because of the COVID shock. Our growth went down. It was expected to be around 3%, but it came down minus 0.5%. So if we manage to touch the pre-COVID level of production, automatically our GDP growth will be around 3.5% to 4%. Plus, already what I witness is export sector, especially textile sector, they are all set to import $3 billion worth of machinery because they are getting a very robust and huge orders from outside. Plus, government is more incentivizing, the construction industry as well as to the export side as well. And lastly, the interest rates, interest rates levels are almost half from last year as well. That will definitely pent up the consumer demand as well. So if you combine all these factors, I'm a very positive person, but I'm trying to elaborate, how this 5% number can be achieved. And I have a full faith that, we will surprise everyone on GDP side and it will come up to 5% level.
Thank you very much, Muzammil Sahab, for infusing sense of enthusiasm in all of us. So, Ibrahim Sahab, so one of the questions that's still parked here, and since Shahjahan Sahab is not here, so I would like to kind of pose that question. I believe there is some sort of an overlap. So we've seen that the kind of the impact the startup space has had in Pakistan. We've seen a significant clear transition with the emergence of startup businesses like Careem, Baikia, Food Panda, Airlift, Swivel. So we all know that they will for sure grow through the life cycle from being a proprietary business to the corporates we've seen in the likes of Careem. So what kind of support do you think the government should give to all these startup businesses?
Is that question put to me or to Raida?
No, it is to you.
Okay, I see a hurdle in this. A major part of startups are in the IT service business, where I see some problem through the regulatory framework of State Bank, like foreign exchange regulations, where they are not able to or not allowed to repatriate part of the remittances that they receive. Actually, they are required to remit that money for equipment, for other services that they avail, or they work in cooperation with certain other companies outside Pakistan. Here, the IT sector or service sector, where there are a lot of startups and those who have grown out of that startup stage and into SME sector, they find themselves handicapped. Because of that, they have to retain a part of their foreign exchange earning or the service charges. They retain outside Pakistan, which is a loss to us. So here we need a modification in change in the regulations, and IT sector has to be supported by changes in foreign exchange rules. We don't have to be too strict about it. We need to bit liberalized on that part. And yes, some great examples you have quoted by Kia and the Careem and others. Yes, they can go towards the corporatization. Government should be giving some tax breaks to the startups in other sectors as well, and and of course the funding has to be, because right now they are depending on angel investors. Banking sector is reluctant to fund these startups, unfortunately. So here too, of course, there is some I guess there is some work going on, and some initiatives have been taken, but it is not across the board and available to everyone. Here there is a lack of support in terms of funding. So I believe that some support should come in terms of policy and in terms of tax relief and tax holiday for the first few years.
No, absolutely. I think a lot needs to happen in terms of obviously making this space more conducive, so that capital can be raised easily and experimentation can take place. And we all know the kind of potential these businesses can have.
Yeah, you see,
In
Khurram,
fact,
they have a potential to export up to 30-40 billion dollars. They do have potential in India. They do it, so it's no rocket science. They do need support in that these terms. If they can, for example, if they can do it for two or $3 billion, we are still very good. So we have really untapped potential over there.
yes, absolutely, absolutely. I think the government needs to obviously put in a lot of energy in terms of making this entire ecosystem more conducive for startup businesses. And we all know that there is something happening in the peripheries, in the form of incubation centers being attached to all these universities, and all these graduates have some sort of playground in terms of doing some sort of experimentation. So absolutely, absolutely. I think it's been a very insightful kind of conversation with you three panelists, and I believe there has been a lot of key takeaways for all of us, and thank you for such a bold, opinionated kind of discussion. And I believe everybody is like cherishing being part of this conversation. And I would like to thank, and I think one of the lines which I would like to kind of say is that I would like to converge my conversation is that I can see so much enthusiasm and optimism in the next few months we are going to see for Pakistan, and I hope that we will see a more brighter and a better Pakistan. Thank you very much for the to the panelists. Thank you.
दिल्ली साहब को ले लें.
You're welcome. Thank you.
Thank you very much, Khurram, for moderating that session. And thank you very much, Mr. Ibrahim, Muzammil, and Raida. I've been listening to the conversation very carefully, and I'm really happy about the direction where the conversation was going. We heard a lot of collaborative efforts that are going in from various industries and from government as well. There's optimism. We have hope. We have something that we are going to look forward to. We are all looking ahead, and next year, next tenure, next term will be better, inshallah. So thank you everyone for listening once again. Next in line, we have our guest of honor who will be discussing the challenges and opportunities for businesses. Mr. Siraj Qasim Teli. He is a chairman, Businessman Group, BMG, and former president, Karachi Chamber of Commerce and Industry. Can you please put Mr. Siraj up? Give us a second, guys. We are just connecting with Mr. Siraj. Assalamu alaikum, sir. Mr. Siraj, can you hear us? Could you please turn on your camera?
Yes, I can. I'm actually in the car because of the rain here. I had to leave the factory. But
I hope you are. Somebody else is driving and you're safe. Okay, I think we are facing some connectivity issue because of weather. So I think there's some connectivity issue. We are still not able to hear you.
Talk if I can. Can you hear me now?
Ji, sir, I can hear you and I can see you.
Now, what do you want me to do?
Okay, sir. So you are our guest of honor. Thank you very much for joining us for today's session. And I apologize you have to do it in such a situation where the weather doesn't allow it. But could you share your thoughts with us regarding challenges and opportunities for businesses post-COVID, especially?
Right, I'll do that.
Thank you.
Bismillah Rahman Rahim. I've tried to hear everybody what they said, but obviously I was on and off because when I started I was in the factory and now I'm in the car on the move. But anyhow, this COVID-19 and the post-COVID-19, what I would think and say is that although obviously it was a pandemic and it's not good for everybody and we had a very heavy type of lockdown in the first 2 months. But somehow I also feel that this has been some kind of a blessing in disguise because we have been able to change a lot and now we are in a different world actually. I mean, it's not that we are changing. I think we have already changed. And the Pakistan has changed a lot and will continue to change. Because the people have started working digitally, the people have started working from home. You know, there are so many things that have changed. As a matter of fact, somebody was talking about interest rate. I would say this was a blessing in disguise and uh, made the governor state bank change and bring down the interest rate. Although we were from Karachi chamber saying that 13.25 was too high and it was not right. He should be following supply side of economics. Instead, he followed the different, he tried to control the inflation through raising the interest rate. And obviously that hot money had a role in it as well. But this COVID made him come down. And I still feel that the interest rate should be around 4, not more than that. Fair anyhow, but things are changing. And first 2 months lockdown was very strict, and that made us lucky, and we did not face the same type of problems and difficulties as the rest of the world. And maybe by the grace of Almighty Allah, that helped us. Another thing I would like to say is now that everything is moving towards betterment, we have to focus on growth and more marketing. And that will only happen if the government also changes a lot of things. I personally feel that the government, its all ministries should change, should also change and try to be digitalized, and interaction between FBR and the business community should end, and they should try to uh, make sure that tax base is increased. Otherwise, you know, they are putting burden on the same people continuously, which is going to hurt in the long run. Uh, but Imran Khan and his team is trying, and they have done a good job as far as controlling trade deficit is concerned. The imports they reduced, which was in difficult, which was definitely hurting. But now everything has to go in a different manner. Most of the government departments have not changed. They have to change. They have to start working according to the digital world this time. Because I personally feel, for, because of my own industry and all that, a lot of things have already changed. And people have now started thinking in a different world. Traveling will now be not that much because this Zoom and all this digitalized video conferencing, I think in future people will not travel the way they used to travel. So they'll be more on focus on all these digital things. Apart from that, I don't know what to say because my focus was out because because of the rain, and then I had to come out. But I feel that this type of program, webinar, I should be thankful to ACCA for joining Karachi Chamber, and I think these type of things should continue, which will definitely, in the long run, help Karachi Chamber as well as ACCA and the business industrial community. We feel Karachi's business industrial community is very resilient, and we need infrastructure, which is at the moment in very bad shape. And you must have heard nowadays that political parties are arguing who is the owner of Karachi, and nobody owns them except the business industrial community. But I feel that things are moving, and we as a business community, if we keep on pushing them, because all the 7 industrial zones, I mean, there are 26,000 industries in Karachi. And if you go to any of the industrial zone, you will find, apart from the main road, you'll find most of the roads are in such a condition that they are not even jeepable. So, the government has to do a lot, not only the federal, but Sindh government as well, because SRB, the Sindh Revenue Board, collects sale tax 98, 97% from Karachi, but they don't invest here. So there are still a lot of issues. And if you remember, even before the COVID, the economy was going down. And that was because of too many tight policies and too many changes. Because every government that comes in, they want to change. But because of that, we suffered extra because of what you call, we were already moving downwards, and then the COVID pushed us more down. That's why we feel that the things are going up very good. But I still feel that we have to see for the next 2-3 months. Uh, the foreign, the overseas Pakistanis, FDI, whatever is coming in, investment or whatever called transfers. People say July it was a record that our overseas Pakistanis have sent their money to Pakistan. But I feel that is because a lot of our people in other countries, especially in Gulf, have been have lost their jobs, and they've been paid gratuities and all these final settlements. That's why this amount is big. But if this continues in the next 2-3 months, which we have to see, because it won't be there. For many things at the moment, because we started from a lower base, and because of that, things are looking good. But really, we will have to wait for 3 months and see that are we really moving in the right direction, and are we really going to grow the way things have been in July. So July should not be the only month where you can be happy about. That's what I'm trying to say. So let's see what happens.
Yeah.
We at Karachi Chamber have tried a lot with the government in these COVID issues, in the lockdowns and all that for the relief. But they decided to pick and choose instead of giving across the board. If you see, the electricity is very high, gas has gone up, and nowadays, taxation, they say they haven't increased any tax. But if I'm not wrong, some 800 and something million taxes were increased in this. The new tax was not there, new name was not there, but the existing did increase a little bit. So what I'm trying to say is, we have come out of the problems. COVID is nearly gone, and inshallah it will go away. And I hope and wish that the way we are starting to grow in July, let's hope it continues and keep our fingers crossed. If that does, I'm very happy. Otherwise, I have a little bit of doubts. I don't know what to say next because anyhow, I would like to thank ACCA, and I would like to thank Karachi Chamber's president and all the participants who have done this. Maybe next time I'll be more prepared and more able to talk things out.
No, we really appreciate you doing this from the current situation. But thank you very much for your thoughts on that. We had some economists from on our panel discussion as well, and they were picking up the remittances issues and the ambiguity around it. But there was a lot of optimism, so we are really hoping that things are going to go forward in a better direction. We have a couple of questions from the audiences. I would like to check if we have Ms. Raida still available on the call. Okay, Ms. Raida, is she still there? Okay, guys, we all understand there's, I think there's a little bit of technology issue, or we had some participants joining in from Karachi as well, which is hit by some weather, dangerous kind of weather. So I think I'd like to thank all of you guys once again for joining us for today's session, and please watch the space for more sessions like this. Thank you once again.